Let's talk about health insurance. Okay, all good stuff. Okay, CFP has also a lot of learning objectives on this. But ideally, I think I remember those were tested. Those were tested. Then it's just a lot of times it's just describe. Okay, you don't need to do a lot of applications or understand, right? Success in life is good health. Okay, so exercise, right? I see many of you go to a web center. That's good. So obviously you need to stay healthy to get money. Yeah, that's what I'm doing, right? If you think about it, this is very interesting. Okay. A lot of people, we are finance people, right? A lot of people are doing finance. However, if you don't exercise, essentially you are hurting your investments. But just for me, right? I get PhD and a lot of credentials. So right, what if I'm not in a good health condition? I cannot do things, right? I think that's the issue with Chinese education system. They don't have a lot of other habits, and then they just study when they are kids. Anyway, let's move forward. Affordable Care Act. I don't really know a lot about it, so I'm gonna just read over it. Okay, it's in 2010. Okay, require larger employers. That's what happened to it. Okay, it requires larger employers, more than 50 people, to provide minimum level of health insurance coverage to employee or face, or you can get penalized, right? Smaller employers, less than 50, I encourage you to provide. So what happens is, I think it's overall it's the same. Health insurance, that's why we don't really have a lot of rooms. It's for the employer, okay. That's all. For most of our clients, that's from the employer. Business owners, right? If you are a business owner, then we can do some financial planning on health insurance. A lot of the case study we're going to do in this class or others, we probably don't really involve a very complicated business, because whenever we talk about business, like business structure, tax implication, all those. So maybe not. But in reality, if you want to work with people and those business owners, they have wealth, you need to know like what kind of insurance would be good for them. They need to buy individual insurance or like a small company insurance, right? Health insurance policy obtained must provide essential benefits, okay, including all those. You guys can read over it. And then they have different categories. This is co-pay, okay. Plan pays the actual equivalent 90% of estimated cost of health services. I wouldn't worry too much about it. I don't know why it's here. Benefits of group health insurance, okay. The ability to obtain coverage at reasonable premium without physical and proof of insurability. A lot of people get it from employer. Why? Because first of all, employer helps pay some of it. The part you pay is pre-tax, okay. And then you don't have to do a physical exam. Okay? You don't have to show them I'm in good health. So is that good? It's good for some people, okay. Who is it good for? It is good for people, old folks basically, okay. Who's gonna go to the doctor very often? Are the people in their 20s or 30s, or the people in their 50s or 60s? So certainly those people who are older. And then they kind of pay the same as you do. Essentially, you are overpaying, they underpaying. You pay for them. But again, this is insurance. That's why it's the same for Social Security. If you think about it, right? The young folks pay for the old folks, and then we have a good society. So that's okay. Underwriting a large group of individuals permits the insurer to spread the claim risk. The main reason why insurance companies are willing to not doing any examination is because within a big corporation, right, there are many different kinds of people, different age group of people, so they have a good pool. Remember, insurance, according to law of large numbers, right, it's all about pooling, okay. If they can get a good pool, they're fine, okay. So that's why smaller premium as compared with individual health insurance policies for those people with who are older, okay. Eligibility, you have to work for an employer, right? And then they have a full-time basis. most of the time. Part-time, they don't provide benefits. If you go to Walmart, there are a lot of people working over there part-time. Why? Because Walmart don't want to pay their benefit. That's just sad, right? It's just a game they play. The good thing is they hire only old folks. They are covered by Medicare, so that's some room for them. Don't think like the United States employers are very evil. They are shareholders. They want to make money. Two primary type of group insurance: basic and major. Don't worry about the definitions. Basic cover hospital and physician bills, surgical bill, not typically with low policy limits. I think this does not exist anymore. A while ago, health insurance, they can have some limit, right? They can say, I'm gonna only pay like up to $1 million. Right now, no, you cannot do it. Okay, you have no limits. Okay, unlimited basically. For the insurance company, group major supplement basic material coverage, permitting a wide range of services, and then maximums. Group comprehensive major medical plans combine the benefits of basic medical coverage and major medical coverage. Plan deductibles are low, and employers may be required to make a copay when receiving services. Deductible has been met for the year. Insurance company usually pay 80%. This is a copay. Don't take it as granted. You just need to read over the policy, take a look at the copay. So this is one example, right? Let's take a look. Plan has $200 deductible and then $1,500 out-of-pocket maximum. If you have a $2,000 medical bill, this person needs to pay the first $200 because that's a deductible, right? And then we'll pay 20%. So that's so the copay is 80%. So 20% of the remaining, total of 560. Okay, so that's the total. The plan will pay the remaining. Okay. So because the person meets the deductible already, he does not need to meet the deductible again. So in the future, he will just pay 20% of the cost until his total out-of-pocket for the year is $1,500. So this is really important, out-of-pocket maximum. So when you buy insurance, health insurance, or when you employer offer multiple choices, right? Certainly look at deductible. And then out-of-pocket maximum. Okay. Those two are very important. This is more important. Then group insurance benefit clause prohibiting you cannot make money on insurance, basically what it says. Okay. Pre-existing condition, what is that? Like if you have some chronic illness, and then cannot last more than 12 months when going from one group to another group. So they do have some condition to basically when you have pre-existing conditions. Some insurance company will have some issue with it because that's kind of guaranteed they're gonna pay you money, right? So sometimes they use the pre-existing condition as a way to block some people. However, it seems they have an act here. They say if it's more than 12 months, which means a chronic, you cannot turn them down. We need to care about those people, right? So individual health insurance, the premium individual health are typically higher because as I mentioned, you don't have a good pool, right? And you don't have before tax money. Employer doesn't really help you, so it's more overall in general more expensive. Everyone should have minimum coverage for medical expense needs. Again, I don't know whether it's political right, but like if you have no money, you cannot afford it, that's fine. Something called a Medicaid, okay. So for our clients with wealth, yes, of course they need to have enough coverage, otherwise they can claim on their property or assets. Historically, individuals with existing conditions require extensive medical treatment had to pay larger premium. Historically, right? Or the premium can be excluded. That's what I was talking about. However, later in 2010, they changed some rules regarding pre-existing condition coverage. So You cannot turn people away, right? This is health condition. So basically, the Obama administration says we need to care for our people. Okay, so that's what they say. Everyone, even though they don't work hard, they don't try to do what they should do, they don't take responsibility, but you still need to care about them. Major medical insurance. Okay, so those are the coverages. You guys can take a look. And then we have so deductible, right? It can vary from a few hundred or to several $1,000s. It's called high deductible plans. To cover family, a lot of time, like my whole family covered under my wife because my wife does not work. Hopefully she can find work soon. After the deductible amount has been met, that's what we went through this with the example a while ago. You can always go back and take a look. So this is another example, right? This is a medical expense, less deductible, this is amount, and then 20% copay on your part. And that's how much you pay this plus this, okay? The remaining will go to the insurance company, okay? So similar to group basic medical expense insurance is similar to group basic medical expense coverage. Unlike major medical policies, medical expense insurance policy only covers specified type of medical expenses. Medical expense insurance may pay for actual expense incurred when receiving health. I wouldn't read over it. If you want, you can read over them. And then those are the coverages. CFP exam is not going to ask you like which one is covered, which one is not. Okay, we just assume that a lot of them are covered. It's not your job right now to remember this. In practice, whenever you have something, they do what they need to do. Okay, you don't have a choice. Suddenly they may ask you how much will be covered. That's when you read over the policy, call the insurance company, call the hospital, and figure that out. They have pre-existing conditions, incontestability, and the grace period too. So we also talk about those in life insurance, right? Non-cancelable policy. Prevent insurance company from canceling the policy for any reason, provided the policy premium is paid. So this is good for you, right? For your clients, because the insurance company, if they know, if you don't have this, they can find all ways to cancel it. Right? Whenever you go to the doctor and then the doctor says you need some treatment, and the insurance company says I'm going to cancel it. Here's your premium. Take it back. Okay, so that's not good. That's bad, right? So let's continue to talk about this. We have guaranteed and renewable. Similar idea to non-cancelable. So I think this is where it's getting more testable. HMO, PPO, POS. I don't really see a lot of those. Mainly HMO and PPO. What are those? So both group and individual can be written on managing care basis. Indemnity health insurance is also referred to as traditional health insurance. Indemnity health insurance plan allows participants the benefit of having a whole range of health care the disposal and not to be locked in the service network for medical cost. So this is managed care insurance. Let's talk about HMO. So health maintenance organization consists of a group of physicians who provide comprehensive care for the patients and are organizing effort to control the rising cost of healthcare. So that's what it looks like. They try to control the cost. So when you want to, so that's why it's cheaper, right? Whenever it's cheaper, then there's a catch up, right? The independent physicians are paid a fixed amount, okay, for each HMO members. And then one disadvantage is that patient choice is limited, okay. So basically, you can only choose this much. If you want to go somewhere else, you need to have someone to approve it. PPO is common, like Blue Cross Blue Shield. I have its PPO. It's called a preferred provider organization. It's an agreement between insurance company and healthcare provider permits members of the PPO to obtain discount healthcare services from preferred providers within the network. Okay. Typically have a very large provider pool, okay, to choose from. not required to receive services from preferred providers. You can go out of network, that's what it says. However, we will have a high deductible and higher co-insurance payments. A point of service plan is considered managed care indemnity plan hybrid. Okay, it makes respect of in-network and fee-for-service for greater patient choice, like HMO and PPO. POS has a contractual provider network. Encourages members to choose a primary care physician. This is very similar to HMO, right? However, and then the physician becomes the patient's point of services. I think this is more common than HMO. I think I was mistaken. This is more common, okay, than HMO, but PPO is very common. The in-network, so you're gonna have a primary care physician, okay, so that's the difference. It's called gatekeeper, okay, so they may make referrals outside of the network if the patient prefers, and outside the out-of-network provider, high deductible and co-insurance payment will be high, right? So that's what it looks like. Now we have tax implications. Receive benefits on a health insurance policy. Those benefits are used to pay for the health care of the insured. No taxable events occurred. So basically, you use the money to pay for health care. If the health care benefit are provided for and paid by an employer, there is no taxable event for the employee. Okay, so that's encouragement, right? They don't do imputed income in this case. COBRA, okay, this is very important, right? So it has a long name. So what does it mean? It means provides extension of group health insurance with some coverage benefits. Some people leave their job or they get fired, right? What happened to them is they have no coverage, loss of coverage, okay? And then you can choose to pay, right? And so when you need insurance coverage, it's gonna be expensive, but still you get some way to get yourself and your family covered. So, like they can charge 2% administrative fee, and then you have to pay 100% of premium. So, do they use it? If you have clients, yeah, certainly let them know there's an option. Whether they choose to use it or not, I think you need to do full information disclosure. Only apply to employers who offer group health insurance plan and have at least 20 employees. They must offer coverage for a specific period of time, okay, based on the following qualifying events. So it has some rules to follow, okay. So 18 months. So basically, if you terminate a job, you can cover you up to 18 months. Okay. So and then some others. HSA health saving account. So whenever you have a high deductible plan, and then you can choose to open a health saving account, you can put your money pre-tax into this account. You will grow tax-free, and then you can draw it to use in the future for medical expenses. So basically, a way to so think about high deductible plan. Let me just say, minimum deductible. Let's say you have a $1,300 deductible, right? What if you don't have $1,300 cash? Okay, so they say if that's the case, you can put your pre-tax, okay, pre-tax money into HSA, and then you can grow, right? And then the money can be used to pay this $1,300 deductible or anything related to medical cost. So that will meet the deductible, and then your health insurance plan will kick in, right? In order to have a HSA, you have to have a high deductible plan. The minimum deductible is $1,350 for individual, and family is $2,700. Okay, and that's the minimum. You can always have a higher deductible. Okay, so the pre-tax contribution, okay, from employee or employer both. You can contribute a lot of money into it. Yeah, they even have a catch-up, so that's why people with wealth, they prefer to have this type of coverage, or people have insurance plan with very high deductibles. A flexible spending account, it's similar to HSA, but it's gonna use it or it will go away. Okay. A lot of deferred income to HSA to pay, typically for healthcare premium with pre-tax dollars. It requires the employee to either use the contributed amount for medical expenses by the end of the year. You have to use it, or it will be gone, right? So every year you have $2,650 into it. HSA permits the employee to carry over unused amount to future years That's HSA, okay, however not FSA. Those are important to know. It's a good comparison. Make sure you read it, okay. Long-term care and COBRA premium are qualified medical expense, but not high deductible premium. You can use this to pay for this, but not the money to pay for high deductible plans. The long-term care and then COBRA. Non-qualified withdraw are ordinary income, okay, and 20% penalty. 100% vested at the time of contribution. So this is your money. Vesting is a common term used in retirement. And then we have distribution from HSA. So medical costs are exempt from income tax if this is a qualified distribution, right? For other distributions, this is non-qualified before age 65, and then you have to pay ordinary income tax and then a 20% penalty. It's very like a 401k, early distribution, or IRA. Once the owner reaches age 65, distribution from HSA are not used to prevent will be subject to income tax, but no penalty. Okay, so you need to remember that. HSA account owners are permitted to roll the funds into one HSA. So you have multiple HSA with multiple employer, right? And then you can roll them over just like you roll an IRA. And then if the rollover is not complete as a trustee to trustee transfer, so basically you can just roll from one account to another. If you withdraw the money to your own account and then put it back, it's called it's not from trustee to trustee. Okay, and you have 6 days to do that. Otherwise, they will assume it's a distribution. If the owner of HSA died prior to distribution, all of the assets, the remaining balance will transfer to another person. So this will go to the estate. Okay. If the beneficiary is the spouse is treated as the owner of HSA, and then the normal HSA distribution rule applies. So there are a lot of rules in tax related things. This is very similar to retirement account distribution. So in case you haven't taken retirement yet, if the account is left to anyone other than the spouse or death of the participant terminates HSA, remaining balance is subject to income tax. Okay, so we'll assume it's just an early distribution with no penalty. Okay, that's all I have.